Okay, I think we're live. So, hello, Rosalie. So, we'll wait a little bit for people to trickle in, but this is the Stop Losing, Start Trading show. And I'm teaching Rosalie how to be a better trader, or at least understand Panoptic and understand trading options in a way that is sustainable. We don't want to have everyone do trades that is against their interests. So with Rosalie here, this is what we'll do. We do this a few times a week. We just go around what my thought process is and what Rosalie's thought process is as well. We try to keep it fun and interesting, but overall, we just want to kind of showcase the platform, showcase the trading strategies, and showcase kind of how to be a good trader. So yes, hey Rosie, how are you today?
Hi, I'm good. I'm good today. The market's looking a bit better. So yeah, I'm feeling good.
Exactly. So today we'll be focusing on a meme coin trade. And I think everybody trades meme coins. We can trade options on all of them. But Cult, I think, is the one that is on the Panoptic app that has some liquidity. So maybe we'll do a Cult trade. But and any insight into the meme coin space that you've seen over the past few weeks?
Yeah, I think there's so many new tokens coming out every single day with Trump and everything. I think, it's quite risky. I've kind of taken a little step back on getting involved in all the meme coins because simply if you're not part of the launch pad, you end up just losing a lot of money unless it's like Tinker Bitcoin or something that actually has a really good foundation and a good community. So I lost a lot of money on Cult.
You won't
But,
be able to do
you know,
100x though on those established. But yes.
that's true, right? So you never know, but at least you won't lose everything.
Exactly. So it's all a trade-off. I think a lot of folks should treat meme coins like a call option, meaning that you spend a little bit, you should expect it to go to zero or be out of the money if it's a far out of the money call option. If you hit the payload, then you make money. But yes, it's tough. That's fine. This is kind of what we're here to kind of figure out and learn. But yeah, again, people trickling in. Again, we'll do short overview of short overview of the market. We'll go over the portfolio that and the trade that Rosalie has done earlier this week, and then we'll try to set up a new trade as well. So I'll share my screen for a little bit. I think we maybe start with the market because there's been an interesting move over the past few hours, which is ETH going up. If you remember, Rosalie had a neutral to bearish trade on. So we'll revisit this in a little bit, but that's fine. The assumption is over a month timescale. So these small fluctuations aren't as important, especially if we trade monthly options. If you zoom out, it's not a big move and it's kind of still range bound. So we'll see how this plays out. But ETH is overperforming compared to the other trades for sure. I'm going to look at the Uni token because the Uni V4 version just launched. Typically, a lot of these are by the rumor, sell the news. Uni has fared pretty well. I'm sure it's very consistent with the ETH price move we've seen. Yes, but at the end of the day, Uni has been holding strong. Huge milestone from the Uniswap team and foundation. So congrats to all of them. And yeah, the market is, I think, gonna be a lot more bullish on Uniswap once they see everything that we can do with Hook. So that's extremely the good news. And again, congrats to the Uniswap team. Maybe Bitcoin, we can see what it is. It's hovering 105,000, pretty good range. Again, a lot of what if we look back, we see it's maintaining its price. So the type of options that you do following a large move is way different than when you think it's kind of near the top or at the top. So again, that dictates the type of trade. If we switch to the ratio is still anemic, but that's fine. Oh, I think this is the inverse ratio. It's actually pretty good. So overall, market sentiment good for ETH, good for DeFi tokens. Perhaps seems like Solana hasn't got this latest increase, but again, it's just kind of the market sentiment is going a little bit more towards the ETH direction. And yeah, so back to last week, we were doing a options trade, which was trying to create a strategy that Rosalie had come up with, which was neutral to bearish on ETH. And what we come up with, again, we talked about this trade, and this actually an account called Intern that was doing this. So, oops, let me disconnect. Intern.panoptic.eth has created that position. We will watch the Intern account trading. We won't do any trading ourselves because we're US based, but the intern or anyone else listening could have done this trade. If you look at and again, back to the first entry point when you are loading or at least entering into the interface on Panoptic, we show the value of your portfolio over time. This is updated every day. We show the P&L of the whole position over time. Again, the whole thing that you have to realize that these are kind of small fluctuations. In this case, the intern account has lost about $60. We'll see why, because this was a bearish trade. The market moved the other way. All things considered, it's actually a very, very small move compared to the size of the position that we created. And back to the initial class from last week, earlier this week, this position was created. This account has about $10,000 worth of collateral. The buying power usage of that position is about 7%. So any trader or any where you allocate capital, you don't want to put all your eggs in one basket. In this case, I mentioned between 5 and 10% is a sweet spot per trade. So you have one trade, don't make it too big, less than 10% if you can. In that case, it was 7%, which was appropriately sized. If we were to create a new strategy or a new trade, also this other one should be 5 to 10%. And at the end of the day, if you can maintain your total buying power usage to 50% or less, meaning that half of your position is still in cash or tokens, and the other half is used to back options trade, this is a good kind of risk profile to have. 50% exposed, 2x leverage-ish. Each position could have a lot more leverage intrinsically, but your whole portfolio is 50%. 2x up or 2x down type of move may wipe you out, but everything in between is good. So we created last week the intern, whoever they might be, created a call spread, and this is the payoff of that option. We can see from the line, it was created here when the price was about 3,250. Price went down. So again, Rosalie, when you see this, what's your first take?
Panic. Yeah, I think clearly I was wrong, and so I don't know if I should, maybe rethink my strategy or if I keep with it. And so I would love to kind of understand how to best evaluate the odds and yeah.
And this is a very, very common question. What do I do? I thought this was bearish. Price may have moved the other way. Panic. This is what you feel. The first thing that you have to realize, this is 7% of your portfolio. Even if it goes down to 0, you only lose 7%. And it's a long-term strategy. This is a monthly option. Day-to-day shouldn't be matter too much. If the assumption is wrong, we'll wait a couple of weeks maybe to see how wrong is what it was. But day-to-day, it shouldn't be something that bothers you. So everyone out there, you may be feeling panic because, I thought it was going down, but it went up. But it's only a day of move, and we can the price here will improve. But we can see from the price, it hasn't moved too much, even though it seemed to be a big move. You are still in range, and this is the important one. You have purchased an option that is above the other one that you sold. That's a construct of a call spread. But the key criteria is, are you still in range? If the price moved all the way to 6,000 overnight, then it's pretty clear that you were wrong. But if it moved 3 or 4% up, yes, you may be losing, but the key point is that you're making fees, and this is the premium that you're kind of earning. You earn some premium. You are exposed in a way that you have a little bit more kind of notional exposure, but fees are still getting collected. You buy an option, sell an option, they net out to pretty much 0, but you should be watching this. Nothing is out of the ordinary or something you have to manage. And yes, the next assumption in a couple of weeks, maybe now you think it's bullish, but currently your initial gut feeling, you have to keep it on at least half the duration. 1 week, 2 weeks is when you may start to panic. But yeah, from that interface, we try to show it on the PNL chart where you started, where you are. Again, you lost $50 on a move that went from 200. So yeah, your position is 1 ETH in size. 1 ETH in size. The price went up by $200, and you were short this position. You only went down that $50. So this is also a different thing that happens. Even though you have 1 ETH worth of notional exposure, you lose less if you're fully short. So this is a good trade. It's still not worrisome to me. And if you look carefully, we'll go over this, but you earn more from the option that you sold than you pay from the option that you purchased. So this nets out to be pretty much a wash. And if you look at the premia, it's maybe going down a little bit if there's a lot of trading, but it's still going to be a good trade. So nothing is panicky. So first step. Oh, yes, first step. Sorry, the music. Yes, first step, nothing to worry about. This is your assumption, so stand by it, especially if it's a long-term one. So this is good. So overall, we can look at the liquidity. Most people are in range. Nothing catastrophic has happened. We can go to the market info page here to look at the rest of the market. Again, this is the Panoptic own liquidity. Most of it is peaked around the current price. You can look at the Uniswap liquidity. This is UniV3, but when we can launch on V4, we'll have also liquidity from the V4 side, but nothing major has happened on the Uniswap or Panoptic side. APY are still good. So overall, there's nothing to worry about from the macro or the whole kind of pool wide. So again, I would say you created a trade 2 days ago, or Intern, not us. Intern created a trade 2 days ago. They have a week, 2 weeks to react. Nothing is alarming, so we just wait. Sounds good?
Yeah, I think with prices always moving, it's best to just stay and I mean, it'll go up, it'll go down, and so the best you can do is kind of earn some fees along the way.
Perfect. This is the trading, the option setter mindset. So that's perfect. So as you say, we may explore a cult meme coin trade. And from the interface, this is in the discover page, but we can see the market for cult. We can see, in this case, the Uniswap liquidity. But yes, and you purchased some cult tokens yourself. Maybe tell me more about what you're feeling about cult is, the Milady meme coin.
Yeah, I was really excited about it. My friends had sent me some right when it launched, and then I bought some more because the whole community and Milady, I figured if they have a meme coin, it would actually make a lot of sense to invest. But then it just kind of kept going down and down and down, and it's going up, but not really enough that I'm still negative. So maybe
when you zoom out. Typically, a lot of the new launches start this way, where it's quite high and goes down. I don't know what happened January 18th, but a huge price action happened. But yes, the recent price action is very choppy, very volatile. I'll show it, but it's like 200% IV, extremely high. That's why you may expect it to go 2x up or 4x down in a matter of days, and this is maybe what we're saying.
On January 18th, there was a Milady party. So that's probably why it went up.
So again, it went down and went a little bit, not as much as you thought. You told me that you may have your bag holder now. You have some call that you may want to get rid of or do an options trade with it. Is that correct?
Yeah, exactly. I just, it's gonna, in my mind, it's already too late anyway. So it's just gonna keep going down. I might as well figure out a way how to profit from that.
Okay. Yes. Perfect. So cult Milady coin, Rosary thinks is going to go down. Okay. My question is it going down to zero or the neutral to bearish or just a little bit? Or what's your monthly, like in a month? How strong is your assumption it's going to go down?
I think it's going to probably go down a bit. I think it'll lose another decimal.
Okay. 10x, which is basically zero. And so that's one fact. If it goes down How can I salvage this? The other question is, do you want to make more ETH than what it's worth now, or you want to just cut your losses, maybe get back the cash that you put in, but nothing more? Do you want to capitalize and make as much as you can on the way down, or just try to cut your losses and be even Steven with it?
Maybe make as much as I can, but is that more risky?
Exactly. It's all a trade off. So sometimes aiming for the moon means that you undershoot quite a bit. If you say, I just want to exit and get my head above water, that's a different trade. So if I'm
I
hearing you
think
right,
if it's, yeah, let's see, if it's a monthly option, I think maybe it would make sense. But then that would mean that the other trade with ETH doesn't make sense. So how could I be bullish now on ETH and bearish
no,
on
I
ETH
mean,
in
it
the
depends. When you
other
deal
option?
with these meme coins, especially on Panoptic, you have to think in terms of the pairing it is with. This is ETH called. So regardless of how you look at it, do you think call will overperform or underperform with ETH? And that's kind of the idea. But in that case,
Underperform, yeah.
I would also agree it may underperform. So if we go from the UI, so there is someone else that sold some options on Colt, so we can actually buy them or sell more. But actually, this is a trade, a pool that has been active. This person's position may be getting close to out of range, but it's in range. But from the markets page, we can go to the trade page as well, and directly from there, we can see, okay, this is the liquidity that's been sold. This is what we can work with. So naively, if you think it's going to go down by quite a bit, a lot of people will just buy a put option, which is this payoff. You go either from this button, buy a put, or you can go from the strategy page here and buy a long put here. So this is the payoff that you would be exposed to, meaning that it starts here. If the price goes to very shortly close to zero, and depending on the size, but you could, let me make it so that it's a bit easier. But you can make something like that may cost you $50. You can make 50 or more if it goes down by even more than that. So that is one trade where you double down. I think it's going to go to zero, so I don't mind about everything else. Let me buy a put option. And that's kind of one trade that a lot of folks may be used to on the TradFi world, buying meme coins. And this is one way to do it. If you look at this payoff, that seemed like a good deal, and this is something that you would want to do.
Yeah,
Okay.
it would. I do only have a little bit left of Colt myself. So I'm wondering how much would it cost, and then how much could the reward be? You
Yeah.
said 50.
So the what you could do is you take your Colt. This is what you're willing to pay in options premium. You buy $50 worth of put options in Colt or ETH, but $50 worth of put option. You ride it till the end. You either get liquidated and it goes to zero, or you hedge your bets and you make some money, maybe a lot.
That sounds good. Yeah.
That's one
Either
strategy.
way. Yeah.
And that's one strategy. And then that might be the one that Intern does. We'll give them two choices, but yeah, this is the one strategy you can do. The other one, if you go back to the strategy, we're bearish. We think the price is going to go down. Another trade you can do, it's on the sell side, but you could do a similar thing where you start here, you maybe are in range, but you ride the way down, earn fees perhaps, then you cap your max loss and that your max profit. And that's kind of the question. Do you want to double down and get as much as you can? Or if you think the price is just going to be choppy, you can earn a lot of fees on the way down. You divest and sell on the way down. You're back to only holding ETH, and then you earn fees on the way. So that's kind of the less risky, less reward perhaps, but higher probability of profit. So that other payoff, again, it's very visual, but what does that payoff tell you?
Yeah, I mean, I think if you really think about the token on itself, I don't think it's gonna go anywhere. You know, it is Milady, and I'm sure it'll go up and down and kind of figure out its steady price eventually. So I think that, to me, that means this one is a better option than the one before. Would that be correct? Or
No, there's no right or wrong answer. It's just
okay.
your feeling, and the sell side and buy side might be something we go over quite a bit.
I think
Buying is a bit more, let's put everything we got into that trade and hope it pays off, a little bit like a casino. And the sell side, which is being the casino, you manage the risk, you get paid because you put more capital at risk, perhaps. Because remember, if the price goes, and this is maybe what I wanted you to say, but if the price reverts and you're wrong, then you can lose quite a bit. And that's the trade-off that people have. The flip side of making a bit of money is that you have a lot of risk on the upside. Even if I were to bring back the put option example, it's maybe less conviction, but if the price goes up, then you don't lose much. So how convinced are you on your conviction is going to go down? How much risk are you willing to take? Is that trade-off that we'll navigate. So even that, we may not come to a decision. Intern.panoptic.eth may decide, but that's the two type of trades. You're bearish, things going to go down. You either buy a bunch of put options and be this kind of lottery ticket you hope to hit if it goes way down, or you are selling an option. You hope that the price is going to be choppy. You're still going to sell. You're still going to make a profit, maybe quite a bit less, but you get paid for it. That's one advantage. And the flip side, that there's a lot of risk to the upside. So everyone has their own trade style, and then we'll see what intern chooses to do. But that would be the two options.
Yeah, I think I would go with the put option then, because you're gambling already, right, with meme coins, so you might as well keep gambling.
Yes, so that's good. So that person that sold the put option, they took that risk, and in that case, they may be exposed if it goes out of range. But you can capitalize on that person's willingness to take risks to maybe double down. So again, I will copy paste that trade for the put option in the Milady and put it in the chat, or at least I'll put it internally and people post in the chat. And that's just the trade of the day, getting rid of a losing trade on Colt in a way that is capitalizing on the fact it's going to go to zero. So fantastic. So yeah, how do you feel now about your Colt? Are you less worried or more worried? Does it add stress, remove stress?
Yeah, I think it removes a little bit of stress. I already lost so much that I am not stressed anymore either way, but maybe at least I can kind of capitalize on it a little bit, so I'm feeling a lot better.
Okay, and then about your interns, maybe his ETH trade, is this something that you think he should be, or they should be worried, or it is still fine?
I don't know, a little bit worried, because I did think that, at the end, ETH will be worth a lot of money. I just didn't expect it to already move that direction so quickly. But then on the other hand, if it's going up fast now, a lot of people will sell to get their profit so that it'll go down again. So I think maybe like one more week and then make a better
and again
decision.
That position sizing being 5 to 10%,
yeah,
not the end of the world if they lose. Again, it might be $600, which is a lot of money, but at least the position was sized correctly. No one is going to be in trouble. The price goes up and down 10% every week, so that's definitely something that you face as a holder too. So amazing. Yeah. So these two trades, I would say, are reasonable. A good starting point: buying a put option, selling a call spread on the slightly more conservative side on the call spread, but still can have directionality. And yeah, same thing with the put option. We'll see. It's like we're in this for the long run, the short term gain. Might as well buy a put option. So that's very, very cool. So all right. So now again, we've posted this if you're on Twitter or on oh, can I see the Twitter one? No, on YouTube. There's questions to be had. I'm gonna add Izzy from the BD team. Hey Izzy, how are you?
Hey guys.
So you've been monitoring the questions both in the Telegram channel and also online. There were a few from last week and maybe a few this week. So yes, what's the Can you send a few questions my way and we'll
Start
see how it
listing them
goes.
off? Sure.
Yes.
Okay, well, we've got one really cool one. So let me get that up for you. Okay. So I have an angel investor who wanted to ask if you could show him how to set up a naked short on Panoptic. So the example is that he thinks that the market has topped for the cycle, and he wants to cap his downside, but have maximum upside if ETH or say any token in specific markets starts to go down for the next month.
So a naked short, they want to cap their downside or upside? Oh,
They want to cap their downside but have maximum upside. I think which would maybe be any investor's dream. But
yes, of course.
For this example, he wants to see a naked short, but then maybe talk through directionality of that.
Perfect. So on the main dashboard, you can go from there to the trade page directly, or I assume it's ETH, but yes, or the ETH page, you go trade here. There's a few ways to short a token. One thing that is very common and risky is selling naked calls. So this is, again, either setting the call button here or going to the bearish short call. We'll go over a couple of examples, but this one is, you think the price is going to be capped. If the price goes down, this is negative delta, you make money on the way down. You cap your max gain, and this might not be what they want, but you cap your max gain. Instead of making 10x, you may make 0.5x or less, but you have fees that collect, and that's kind of one way to do this. So naked call, you just think it's going to go down. You choose your strike, perhaps where you think that the max gain is going to be. If you're here, you make more money. It's selling, so you can sell wherever you want. But that's one strategy that a lot of folks using purely options can do to be short an asset. Sometimes you can cover it. It's a covered call. But if it's just, I want to capitalize on the down move, this is one way of doing this. But as this question was, they don't want to have any caps. So this is maybe not what they want, meaning that they want to have all the way down with a lot of profits maximized if it goes to zero. So you can take this naked call, which is capped, and you can change the strategy and use a short perp, again, to fully get into the all the way down type of scenario where it's like shorting the perp itself. If the price goes down $1, you make $1. If it goes up $1, you lose $1. So this is another way of creating a short. The reason why this is an attractive trade as well is that you are selling a call and buying a put at the same strike. So from the strategy, it's kind of preloaded. But in reality, we can construct this manually. But you start with selling a call, and then you choose where it goes, and you buy a put at the same time, and you stack them one on top of the other. And if you do this, you have what is a short perp exposure, a lot of gains to be had if the price goes to 0 or even 100. If you zoom in a little bit, going from 34 to 3,000, you can make, you can say it's a one place the price goes down by $200 or $400, you make 400. So you can have this, or you can tap into leverage and do what is going down by $400, you make 4,000. So that would be one trade. You go from the strategy, shorting the perp. One key advantage maybe or solely between this short perp and the short perp you may be trading on Hyperliquid or DYDX back in the day, or even Binance, is there's going to be a funding rate. And that funding rate could be different than what you have on these different exchanges. And the key point is that that funding rate could actually be negative when it's positive on Binance or vice versa. The funding rate that is created in Panoptic and using options is determined by the put and call liquidity. And this is where it gets a bit more complicated. But by structuring your position, you can be going from what looks like two identical trades, but one of them will have a highly negative funding rate, and you move it a little bit to a different place, and you can have a highly positive funding rate. So this is maybe a bit more advanced, but as a short perp, it has a few more knobs to turn, a few more things to optimize. But the key point is that if it's, and short is mostly negative, but if it happens to be positive on Panoptic and negative on Binance, there could be kind of a trade to be had because you're optimizing different things. So short perps, there's a third axis, which is where you want to short, what's your strike, and that strike tells you about is it positive or negative funding rate. It's not global, it's a bit more local in a way.
Okay, so that's to protect against to make money basically if things go down, right? So
Yes.
that's being bearish. Now, what can he set up though to maximize if he's wrong, right? Can he set up another trade where if he's wrong and the price goes up?
And you cannot have it both ways in anything in life, I'm sure. But if the conviction going up or down or neutral or extremely crazy price move is also another one. So there might not be liquidity here, but this may seem very attractive because you make money if it goes down, you make money if it goes up. This may seem like a tiny bit of payment. This is buying a straddle. This is delta neutral, but capitalizing on volatility. So your long vol, you think the vol is going to stay up, you think it's going to move like crazy. This may seem like a good trade because you make money if it moons, you make money if it collapses. And this is buying a straddle. You can do it now on Panoptic, but only in the monthlies because this is where most of the liquidity is. And this may seem a bit less attractive because you can pay $400 for that right to be getting money, but it is a long trade. A bit more, less committed. It's not buying a call, buying a put. It's wherever it moves, I think I make money.
Right. So this looks like it would be very profitable, but in reality, you would need how much of a price move to start earning?
Yes, we do some estimates as well of how much it's going to cost, but the key point is how much are you paying for this? And how big is that kind of break-even point? So this is a monthly. There's actually a fair amount of liquidity, so that could be a good trade as well. We think so this is a weekly option. In a week, if the conditions stay the same, you as a trader will buy this for $220. And this is what we estimate here. Weekly option, we estimate the rate. It's never known, you don't know, but that's going to be kind of what the expected one is. And if you assume that everything stays the same, the break-even is 3,000 to 38,000 because of that 200. So it's a trade-off. And maybe you're right, maybe you're wrong, maybe you pay more, maybe you pay less. But at the end of the day, it's a trade-off. And one thing, again, maybe we this is good. Maybe next time I won't spend as much time on each question. But the price of that option is going to be determined by the fees that position would have earned on Uniswap. And if you look at the history of Uniswap and the narrative getting pushed around is that LPs don't get paid enough. They don't make enough money. So that means that buying an option will be cheap or cheaper than what it should be. So maybe even though it seems like it's $200 seems like an expensive price, the same price on Deribit could be $300. And that's actually a good deal to trade this one on Panoptic because intrinsically options in Uniswap are a bit cheaper, but the more you buy, the more you pay. So it's a balance. But for now, still early, lots of liquidity. This one is reasonable trade. And if you're willing to take the risk, that is your payoff.
Gotcha. Okay, so same thing from the same person, actually. So shout out Merritt. Thank you for asking these questions. He wanted to ask if we were, I think I know the answer to this, but maybe you should tell everybody else. It'd be really cool if we did a thread on some trades that went wrong or went right. Because we are open, an open protocol. You could see everybody's trades. There's no secrets on Panoptic.
Yes, exactly.
You can try to do it right now. I don't know if you feel up for that.
Yeah, so we'll do one quick one. Okay. You can see from the markets page, you can do on the markets page. As Izzy said, it's all open. It's all someone sold something very, very recently. So that's good. It's all very, very transparent. So might as well make it public so that you don't have the sophisticated on-chain investigators knowing, but everyone can know. So this is the options that have been minted. Yeah, just now. Someone minted 2 options. We can look at them. This is the option that they closed. So actually, this is a good examples. But this is all the trades that happened. We saw some liquidations. These are the orange bars. But overall, it's actually pretty interesting to see the trading activity happening. we'll see that one trade, and we show the P&L. And that one, they made 5%, $700. You can just click on that little chart here. This is selling a put, but we can see that trade entry point, exit point. So I think this is a good trade because they made money. We'll see what happened again by doing some investigation. So now we're in spectator mode. We look at this user's position. I don't know who it is, but they started and sold a put option, which is kind of that type of payoff. They sold it 18 days ago. Price went up. They realized, oh yes, I'm making a lot of money. Let me close that trade. They made $800 in premium and an extra $1,600 in price movement. So there's two components. They were positive delta. Price went up. They also were selling an option. They got paid. So it's actually a fairly good trade. And you can see the premium going over time. It's been in range the whole time. Nothing to worry about. It's not me because I was live, but if I were the holder of that position, I'll be very happy. About 7-8% in 2 weeks or thereabouts. Very, very good. Again, the entry point was this line here when the price was 3100. Now it's 34. Very good trade. So maybe we'll do this again every time. But what's the latest trade? Is it good or bad? Regardless, we'll see what it was.
Okay, now random offshoot question. As a gambler, I guess, how do you know when to get out? Like this person got out seemingly at the right time, but from where it looks like they got out, there was still some potential upside that he maybe left on the table, or probably she.
No, yeah, that's right. Women are actually good at risk management, and options are kind of one place where being at least saying too crazy means that you may be on the short end of a large loss. So how do you? Yeah, actually, so this is maybe the intern account won't have any positive trade to manage yet. So yes, this person, I would say, did it perfectly. You don't want to get 100x in any trade when you're selling because of that inherent cap in profit. The most they could have done is 3,600. Seems that they made like 2,200, which was half of what they could have made. And if you think about this, they made half in 2 weeks. And this half the time of that option, which is a weekly. So if you're half the time and you made half the money, do you want to risk it and see a reversal? Or since you're in the profit, you can just hold it? Or you can just close it and realize. And that person, we saw they closed, redeployed. So that's what I want to see. You want to net your gains, redeploy, different strategy. Maybe they moved up or down, but they had a market. So the entry point is important. The exit point is perhaps more important. But yes, in regular options, you look at 50% profit, meaning that you sold an option for $100. If you made $50, do you want to risk it for 2 more weeks, or you want to close it and kind of realize? So that's the same thing that happened. Here it's perpetual. Maybe if they held for the next 6 months, it would be in range, it would make more, but it's a different trade. So you move on, realize your profit. They made, again, 6%. Oh, yeah. Okay, so this is the total. So premium is one thing, but the total was 6%. They made 6% in 2 weeks, $1,600. Perfect trade. If you're on the losing side and the price went down, it's a different calculus, but you may say, I want to get 0%, and I'm okay with netting my loss and then at least not being exposed. So overall, there's a delta. There's a bunch of stuff that happens. They closed that position when the delta was 50. It's also an indicator, but it's just great. It's just a good trade, I would say.
Okay, yeah, maybe that's something for another day is looking at the deltas of these trades, because
and again, we're figuring this out, but there's like how to set up a trade, and this is what we'll do probably for this segment for like the next few weeks. But closing management, a portfolio of one option is dealt differently than a portfolio of 3 or 5 or 10 options. It's a different thing. So one can go down, you have an offsetting position, it goes up, nets to zero. You don't even touch anyone, even though one may seem to be losing $5,000. The other one made $5,000. So that's kind of netted against one another.
Very cool. Okay, and then we've got a few fun questions, I guess. So what are the right ways to use options for an aggressive risk-on strategy? That call's coming from inside the house. So
if you have a lot of conviction and you have a conviction, someone has the exact opposite, so it's hard to know. But a lot of what folks are thinking when they think about option is buying options. And as we discussed earlier with the call trade, this may look very attractive in terms of I pay a tiny bit, $50, and technically I can make hundreds, if not thousands. And the conviction that you have, if it's realized, then you can make a lot of money. And that's what people maybe more naively think about when they think about options is I'm gonna buy calls, GameStop sell, or I think the economy is going down the toilet. I'm gonna actually be buying puts, and while everyone is down 15%, I make 200%.
Yeah.
So again, the trading style is up to you. When I weigh the risk reward, the key point is that you're paying for that unlimited upside, whether it's going up or down. And that cost is unknown. You have to factor it in. And if you look at past studies and kind of back tests, only buying is because you pay is kind of net negative EV. You cannot do this sustainably. If you have one shot event, I don't think insider trading is what we want people to do. But if you think you're convicted that could work once, could work twice, but it's going to fail 95% of the time. So I would say, and this is part of the education, being high conviction works within the time frame that you're in. So if it's a monthly conviction, you do a trade that should realize itself in the month. If it's a multi-year one, it's a different trade. If it's a daily or swing trading one, it's a different trade. So the same way that the unlimited upside that you see for buying a call option, you have to think about what the range is. And even though this looks like very, very bullish because you have a lot of upside, if you're out of range, you may, there's a concept called forced exercising, but you should not consider what happens above that range. You should consider the endpoint that's here. So if you are bullish, you can buy a call or you can sell a put, and we'll try to create the similar trade that you have here. This is the max. You start being in range, it goes all the way up. You look at what the end result is. You don't care because if it's stable, because you will sell it before. So you can have this being a trade that you get paid for. You have a slightly good conviction is going to be to 5,500 within a month. So maybe you have 5,500 price target. Buying a call means you pay $1,000 for it. Selling a put means you get paid $1,000 for it. So it adds to that ratio. So high conviction trades, if it's a multi-year, options may not be the best because it's so unknown. Buying hold is one way, but high conviction trades for a weekly, monthly, few months, could be 3 months. There's a trade that selling a put is maybe more positive in a way to trade.
And so also just because I'm getting used to the payoff curves, but this is the same payoff as if you were just LPing in Uniswap, right?
That is correct. So again,
why is it better doing it in Panoptic, I guess?
Good question. So this is a Uniswap LP position. You deploy it between 3,300 and 5,500. It's getting your own coins out. You would mostly be putting ETH in that trade. Price goes up, you sell it up to be 100% USDC. So above 100% USDC, payoff is flat. Below 100% ETH, you have this exposure. So if the coins come from your wallet and you put them there, you don't lose necessarily because you were holding it, but on the way up, you make money. We extract this away. This is the same payoff as a Uniswap position. It's in Panoptic. The two reasons why it's better to do it on Panoptic is one, this is leveraged. So you borrow ETH. It's not coming from your wallet necessarily. We allow you to borrow some ETH. And we allow you to do up to 5x leverage, but there is a effective kind of spread that exists, but you can double the position size with borrowing more 1 ETH, and you have 1 ETH from you, and you make twice the fees, twice the upside, twice the downside maybe. So that leverage component is what risk management is all about. But yes, you can actually get a better payoff because you have twice the size because you borrowed and leveraged on minting that position, which is not something you can do on V3. And even with V4 hooks, you may have to borrow on Aave, move it to Uniswap. Here it's all integrated in Panoptic's first. Yes, leverage when you mint an option. And the other one, you sell an option. This is a put option. Someone could buy it. And if they buy it, they pay you more than the fees. So you make the exact same fees as Uniswap, but that buying pressure means you make more in returns. That offsets some of the risk as well. You set an option, someone buys it, you enter into some type of contract that keeps it on for a while, but they pay you more, and that's kind of the trade-off. So leveraged position, but you can still be unleveraged, and that's fine. But also the extra fees earned is important. And here, no one has sold it, so there's no advantage. But hopefully people can see. But yeah, this one, if you were to sell the 3,400 put, the buyer pays you 18% more than the fees. This is one number, 1.18. So that is where you can choose where to sell, not just based on your assumption, but also where the market is driving. A lot of folks have bought this put option. If you sell, you earn more as a result. So that's the other advantage. The fees now are higher, helps you offset your risk, and at the end of the day, kind of make you hold a bit better than just holding on Uniswap.
Right, because in Uniswap, you're always kind of getting the short end of the stick, right? Like if ETH continues to go up, you're being sold out into USDC, right?
Yes, and if you start with USDC in your account, you buy the ETH, you sell it out at a higher price, you have more USDC. That's a good trade. What a lot of folks have is maybe they have some ETH, they have some USDC, they create both. The trade is not just kind of directional, it's more like a strangle, which is something like that. And this is where impermanent loss charts people like are used to. But you have exposure on both sides. You're 100% ETH, but you purchased on the way down. You're 100% USDC, but you have a short ETH component. So it doesn't look like a good deal, but if it stays in range, this is neutral. You don't think it's going to go to 1,500. You think it's going to go there. Then you get paid more. That curve shifts up. It's a different trade, delta neutral, but you can also benefit from the price being in range.
Very cool. Okay, and I think we've got time for this last fun question. I mean, this is a little bit open-ended as well, but we'll see what Guillaume has to say. If you had a mandate to 100x your capital, or you lose it all within 1 year, what's your strategy?
So actually, if you want to 100x your bags or whatever you own, options may not be the best way. If you're it's a 1 in 100 chance of making 100x. And if you would be buying options, which is what a lot of folks think about for like upside exposure, I'm going to buy this call. I'm going to make a lot of money on the way up. But if it's wrong and it goes down, then you pay and then you lose money. If you say, no, I'm going to think it's going to be kind of any side I'm making money, oh yes, that's fine. But if the price stays in range, you lose. And the 100x that you can see is going to be highly unlikely. So also that's part of the education. The best you can expect to be sustainably making on trading options or Uniswap LPing or any type of kind of higher risk trade than just treasury rates is maybe 40, 50, 60% per year. This is 1.6x, way far off of 100x. Meme coins is, again, maybe 1,000x, but it's 1 in 1,000 that do that. In the world of options, you have to be realistic. Making 40% is actually great. There's a lot of risk. You can lose 50% in a year. But at the end of the day, it's a different trade-off. We cannot expect to get 100x with options and survive. Maybe if there's 1,000 traders, the genius that had the right trade makes it. But at the end of the day, it's just a different type of trade. On the option side, what I'm personally doing and what we try to advocate is that you do selling options. You're on the short side. You are hoping the fees will create enough revenues. And there's a concept of implied volatility and kind of there's a lot going to it. But if your IV is 100%, that translates to an expected return in the fees. If the IV is 200%, like Colt, you have more fees, but more price move. If the IV is 15%, like the S&P 500, yes, you have less fees, but less price actions. It's all a trade-off. But everything that you do, if you are managing REL, price moves quite a bit more in Colt, but you make more fees, it nets out. Price moves quite a bit less in S&P 500, less fees, but less price action, so that you can actually expect the same returns. It's a weird way, but the risk is kind of the same regardless of the IV if you manage your positions well. The one thing that is the end scenario is that if the market crashes, S&P 500, Colt all the meme coins will crash all at the same time, and the IV will spike up for ETH for S&P, for instance, or ETH in a way that you if you're on the sell side, you can make a lot of money, but everything will move the same way. So there is kind of a trade-off. But when everything is somewhat uncorrelated, you have multiple positions. Again, try to do 20x, 30%, 20x, 100x, impossible. 20, 30, 40, 50% manageable. You can be extremely risk-taking and make maybe 100% per year. That's 2x. And that's kind of your superstar trader. But that happens. It can happen.
Yeah. So when you were talking about this, so for the like the cult example, right? So you're thinking it has a super high, right? The super high price volatility. Yeah, maybe let's just go to that.
Maybe we'll go to the market. Again, we try to show some information that's relevant on the markets page. Here, this is the liquidity. Sharing the right thing? Yes, liquidity. We show the IV in the Uniswap stats region. IV is kind of a Uniswap centric, like volatility price moves. In that case, 200% is the IV that we use from kind of our internal math models. This is quite high for any stock in the stock market. Might be middle of the road for any meme coins. But that is kind of what you're working with. This one has 200% IV. It has characteristics of a price that can go 2x up in, or maybe more, 4x up in 1 year, or go down 80% in 1 year. That's your percent IV.
So yeah, I'm just curious. I'm trying to think. I do believe a lot of meme coins are on UniV2, right? And is it just because you can kind of have this like they assume there's a massive like IV and there's a massive movement in prices. So how do you get them to UniV3, I guess? And I guess if you were to be a meme coin seller, like say you don't want to get rid of it, but you'd like to put it to work, right? Because I think a lot of meme coin users typically just hold it and they pray that their one meme coin maybe shoots to the moon and maybe not, but they just hold it. And so getting them to deposit in something like UniV3 is tough because you have to set the ranges, and you could either just set max ranges.
So this is kind of the V2 to some extent is a super wide option. If you like follow us, you'll see that the width is linked to timescale. And if you do full range, it's like an option that expires years from now, decades from now. We have a weekly, monthly, and yearly timescale as well. And you see with yearly, it's still pretty wide. So what you see is that UniV2 is super wide. The returns, actually, the IV is quite low, but because it's 200% IV, you think, oh, I'm making 50% per year. But the price moves mean that you're net losing out. So the meme coin communities that launch on V3, like Cult, they probably do like what looks like full range. You have a lot of liquidity, full range, and other people come in and kind of LP on top. But yes, I would say that the entry point for either a team that has a bunch of token or a whale should also come into the realm of options on Panoptic. And as a purely passive user, you can lend your tokens on Panoptic to traders and market makers. And if you have a bunch of Cult, you can say, hey, I want to earn 10%, 11% on that Cult because it's being borrowed by degen traders. That's one way to kind of get exposure. Your coin doesn't sit in your wallet. It sits in that lending component of Panoptic that can be borrowed. And another way to do it is also create these super wide long-term positions. And if it's a monthly or a yearly, you can have to manage it every few weeks maybe, but it's not going to be something where you have to be on top 24/7. And the violent price moves that we've seen will be a blip on your P&L, but you'll be earning quite a lot of fees. So that's another way. You can trade options and maybe on the sell side first, but you will have a longer term timescale. In the case of Rosely, was that if it's going down, there's a strategy for you to sell options into the down move. When it's going up, selling the up move. But on the sell side, you don't have to wait for someone to sell an option to buy. So the sell side allows you a bit more flexibility. So let's say again, the two ways is to be just a passive lender and have other people manage liquidity for you, or if you want to be a bit exposed and transform that 10% of being passive into 50% because you have a 40% APY component on the selling, then you can sell kind of these very wide, not full range, about much smaller, but you have still 2-3x higher capital efficiency than full range.
Cool.
I think we have one more question here in the live stream about launching on L2s and Solana potentially.
Yeah. So again, we are building a primitive that is almost universally tied to any AMM. If you have an AMM, you have an LP liquidity provisioning. If you have any type of liquidity, like it's options being sold. And unless you embrace the options nature of LPing, you won't be able to actually be kind of profitable, because at the end of the day, any liquidity, this is the ETH BTC, but any liquidity that is deployed is options being sold. If you don't think in terms of options, you have a lot of that liquidity that sits out of range. So it's almost our duty to launch on all the layer twos, all the chains that have an AMM, to make options more integral to how you trade and be an LP in AMMs, as opposed to just be, oh, let's try to be in range. Oh, and this is out of range, I don't mind as much. But it does matter. You're losing out on fees. So the goal is to launch on all the layer twos that are EVM based. So Unichain, when it comes out, UV4 came out today. Again, congrats to the team. But Unichain comes out, I'm sure, shortly thereafter. But Base, Arbitrum, Optimism, Polygon, Avalanche as well. We will launch on all the chain where UniV4 is now and UniV3. With Solana, I do think it's a huge market that we should also focus on. It's a different, so it's a different smart contract architecture. So it's a bit more longer time to develop. But at the end of the day, we expect to have a Panoptic branded options offering on Solana. And if we don't, someone else will do it and seal our launch. So this is kind of the plan as well. We'll go everywhere. EVM, SVM, again, once we have those, we can deploy also on all the other chains that are based on that.
Sweet. I think that's all the questions. And I think options hour is coming up on the hour. So
exactly. So thanks for sticking around. We'll try to even do clips of those so you can see them, watch them. Again, Rosalie is getting stronger and more powerful every day with the knowledge. And I want you guys to also follow the same route. So I'm glad that, again, we can learn together. Same thing with Izzy. Thanks for doing the questions. And maybe last comment. So Rosalie, what do you think we should do next week? In terms of either market or me or category of coins, or what's on your mind for the next week?
I think we should explore something with Bitcoin for sure next time. I think a lot of people are saying that, this is kind of the high point of the market. And so it would be interesting to kind of see what the sentiment is like and what the best option would be.
Perfect. Yeah, trading the Bitcoin ratio, it's a proposal that sits here. But yes, you can... Flippening is now way back in the rearview mirror, but you can still trade the ratio. So yeah, definitely, I think that's going to be a very good idea. So yeah, we'll try to trade the ratio on BTC ETH. But yes, overall, thanks everyone for coming. This is great. This is saved on YouTube. We'll publish clips. Feel free to ask questions, either even DMs on Twitter. I'm happy to answer them. All right.
Thank you.
Bye. Let me put the music back. And then we'll slowly phase out.